Okay, Puneet. In response to the decision made by Bank Indonesia at the Board of Governors meeting held on March, what is DBS view and how does DBS interpret the decision taken by the central bank?
Thank you. Last week we had the BI monetary policy meeting, and BI kept the policy rates unchanged at 575. It was largely in line with what the market had expected. BI also gave comfort to the market that inflation is expected to remain in its target range. So from BI's point of view, at the moment, I think it looks like currency stability is a focus area. And for that, they again mentioned that they will be actively intervening in the market, whether it's spot market, TNDF, or through Indo-GBs. I think the way I see it is, I think the other good thing that happened was that there was clarity also from Pak Peri, the BI governor, around the market chatters around the 2023 financial sector law that market was talking about, that there could be some revisions to that and there could be some changes to the BI mandate. So I think Pak Peri clarified that I think that basically the mandate more or less remains the same. And other than that, there was also a clarity given on the view on the interest rates. So I think the way we see it is at an opportune time, BI will start cutting rates further. So DBS's own view on policy rates in Indonesia is another 50 basis points this year.
Okay, so how does DBS interpret the possibility that interest rates cuts by BI and the Fed may be delayed due to the strong dollar and US trade policies?
Okay, interestingly, last week we also had the Fed's monetary policy meeting. And again, if we noticed, Fed also mentioned that they're seeing upside risk to inflation, downside risk to growth. Clearly, tariffs are a key factor there. We do see that the tariffs are not only impacting the rest of the world, they're going to have an impact, at least a short-term impact to the US as well. So definitely, the Fed is going to be in a wait-and-watch mode. Our view on the Fed funds rate is again another 50 basis points of cut this year. But if you look at the Fed fund futures, we've seen a lot of volatility there as well. For this year, the Fed fund futures till December end were showing a trend of about 25 basis points cut to all the way 75 and then now back to about 60 basis points. So clearly, the central banks are going to be looking at the data and announcements which come from the Trump government. As far as Indonesia is concerned, besides what's happening globally, for us, it's also going to be our own domestic developments as well. So I think for BI, the currency is going to play an important role. I mean, if we continue to see rupiah weakness, then obviously, the decision gets delayed a bit. They first try to bring in stability in the rupiah. And other than that, I think the good thing is that on the inflation front, we are comfortable. The inflation is expected to remain in BI's target range. And the measures that the government is taking, whether it's on the electricity side, on the Lebaran-related initiatives, I think we're going to keep a lid on the inflation.
Okay, talking about the investment opportunities, what are the investment opportunities and challenges if high interest rates continue until the end of 2025? And what if rates decline as expected?
Okay, first thing is a given that elevated interest rates do have, take the borrowing cost higher. And we do see pricing pressures faced by corporates and by consumer. So if you look at it from Indonesia's point of view, as I said earlier, inflation is well under control. I think it looks well anchored, but the focus is going to be more on the currency. So the currency is going to play a critical role to ensure that, if that's stable, we see probably the rate cuts happening much earlier than what, otherwise you could see a bit of delay. The other thing is that if you see the overall impact from the currency point of view, this year we've seen a fair bit of volatility in the currency. And I think that will also delay the rate hikes or rate cuts for a lot of countries. Specifically, if you see from Indonesia's point of view, we also saw that 2022 till 2024 there were rate hikes by BI. Unlike the region, we did notice that the hikes by the banks or the passing on of the same increase in interest rates, the magnitude and the pace was not probably the same as the rest of the region. So the way we see it is once the rate cuts happen, I think the demand is not going to immediately bounce up. What will be needed is we should see that there should be ample liquidity, and the transmission of that should happen to the last mile. I think that will bring in bigger benefits. I think from an opportunities point of view, the way I see it is if you look at the bond market at the moment, the Indonesia government bond market, I think the curve is extremely steep. The 10-year Indo-GBs are at the moment hit about 720. Currently, I think they've come off to about 715 kind of levels. Those look pretty attractive because the 10-year Indo-GB versus the policy rate, there's a difference of almost about 140 to 150 basis points, which is a fair amount of steepness. Also, if you look at it from the real yields point of view, I think pretty attractive at 3.5% to 4%. And if you see the spread between 10-year Indo-GBs versus US treasuries, you see almost 290 to 300 basis points. It was hovering at around 240 to 50 basis points. So I think that's an opportunity to go into that market. Yeah.
Okay, so talking about the opportunities, generally the government bond or SBN market is much more sensitive to interest rate movements.
Yeah.
So to what extent does DBS view the key advantage of Indonesia's government bonds compared to securities issued by other countries in the Asian countries?
Okay, interesting question. Shanti, when you look at this particular market, our Indonesian government bond market, I would say is much wider and much deeper than a lot of other bond markets in ASEAN. That's the first thing. The amount of investors, the investor range into our Indonesian government bond, it's much wider. We see there are banks, there are offshore investors, there are retail investors, and we've got asset managers and insurance companies. So it's a wide range of investors there into this market. Also, if you look at the offshore investors, while we have seen a drop post-COVID, but in the last 3 years, that ownership of foreign investors has been fairly stable, hovering around 14 to 15%. Again, as I said earlier, I see opportunity in the Indonesian government bond market, given the fact that I think ours is the only one which has got a real yield of close to 4%. You won't see that in ASEAN, so that makes it very attractive. We also see the steepness in the curve, which I just mentioned, about 140 basis points spread to the US Treasury is attractive. So from that point of view, I see that I think we are placed in a good position, and we should see offshore flows coming back.
Okay, since the beginning of 2025, the yield on Indonesia's 10-year government bonds has been moving within range of 6.8% to 7.2%. What is the best forecast for the trend shift in 10 years SBN yields for the rest of 2025?
Our in-house view is we see, I think, the 10-year yields closing at the year at in a range of about 660 to 680, 6.6 to 6.8%. This view is based on the outlook that BI will reduce its policy rates, and also there won't be any surprises on the fiscal front.